Welcome back, and today has been the fourth straight day of decline coming in for the gold prices as stronger global economic data and improvement in global equities hurts the bullion safe haven appeal. On your screens there you can see 1230 very flat moves coming in for that space. Ditto is the case with silver, $17 just about holding, and as far as the Indian markets go, you have seen some declines coming in here as the festivities get over in the previous week. Let's get in a global perspective then, and John Hathaway, CFA, Senior Managing Director at Tocqueville Asset Management, joins us with his outlook on the precious metal space. John, hi, welcome to the show. What's really your sense or view on the gold prices now in the near and the long term?
Gold prices have bottomed out, and we made an important low at the end of September, early October. Sentiment was the lowest in at least 10 years. The commercials were the least short they've been, which is a very positive sign. So my view is that what we saw in the last 2 weeks with gold bottoming out somewhere slightly below 1200 was an important bottom, and I believe that we'll see substantial upside from this point on.
John, also the Fed minutes point that they may not raise the interest rates too soon. Would that in any sense continue to support the sentiment for gold buyers?
My guess is we could look 6 months out and see central bankers in a full panic mode, out of ammunition, with the economies of the world slowing down, with financial markets behaving as they are today, with the Dow today, I think as we're speaking, is down several hundred points. It's a new world, and I think that is much more important than taking Fed minutes at face value. I think that's just cosmetic commentary on their part. And they still have a lot of believers, but the thing that will drive gold will be a loss of confidence in central bank policy, and I think that's around the corner.
Sure. John, also what's your sense closer home to the Indian government now on the gold import curbs, because there are a lot of noises coming in that they might want to increase the curbs or go back to what they were in the sense earlier?
You know, whatever the Indian government's been trying to do to curb imports hasn't been working. So if they were to take even a slight step towards revising their attempt to curb imports and become a little bit more friendly to what the Indian investors want to do, which is basically buy more gold, who knows what the upside could be. So I'm not, I frankly am not that well versed in the minute details of Indian policy towards imports, but the last figures I saw would suggest that whatever the Indian government was trying to do to discourage imports was failing.
Sure. John, also how do you read the global gold trends? Most reports talk about prices falling to as low as $1,000 per ounce, and you have just said that prices may perhaps have bottomed out around $1,200 per ounce. How would you look at all of these reports then?
I think what they're doing is they're preparing for the worst and hoping for the best. So there's been an enormous amount of cost cutting, and so the industry, in my opinion, has made a very valiant effort to reduce costs, reduce headcount. I think if prices don't improve from here, you'll see some mines shut down, and supply will start to shrink.
Fair point. So, John, how would you, just again, coming to the same question, how would you read these reports? Has the gold bull cycle ended, or are we looking at some extended stability coming in for the prices?
Absolutely. Gold is on sale. And again, if I look at the behavior of investors in your country and other parts of Asia, there's an enormous appetite for gold. So I don't need to say that sort of thing to your audience, but here in America and in Europe, there's a complete misunderstanding of what gold is all about. Gold is basically a way to protect capital, to ensure financial wealth at a time when we have radical experimentation in monetary policy where, frankly, our policymakers have no idea what they're doing. They're basically doing what they're doing on a very experimental, making it up as they go along basis. It will not end well. And it seems to me simply an act of prudence to have exposure to physical metal, because over time and throughout history, having some exposure to gold has always protected against devaluation of paper currency.
Fair point that, John. We'll let you go at that. Thank you so much for coming by and giving us your sense on how do you feel about the precious metal space.